Okay, so there is always so many things to talk about, and a lot of it is planned on what we say on the podcast, and sometimes it just isn't. And so we kind of did one of those spontaneous, what are we going to talk about today? And your daughter happened to be in the room, Lacey, and then you kind of brought up, hey, Sid, should we just talk about financing? And she said, what is financing?
Yeah. Well, actually, didn't I ask her what we should talk about?
Yeah.
Maybe, maybe I said, what do you think we should talk about? She's like, financing. I said,
Yes,
well,
but
and then I asked her, do you want to be on the podcast? She's like, sure, but what is financing?
so she wants to talk about financing, but she doesn't know what it is.
She doesn't know what it is. So my answer to her was to go look it up in a dictionary.
Right. And do you happen to have one of those hard copy dictionaries in the house still?
We actually do still. Yes.
That is good.
So yeah, we just kind of took her lead and we're going to talk about financing.
Mm-hmm. And one of the very first principles that Nelson always talks about, if you want to understand what the infinite banking concept is that, every dollar that you spend is a financing decision. For the longest time, it's like, I think we just take a lot of things for granted. We kind of start to understand what things mean just over a period of time. But if you're not asked to actually define what that is, it's kind of like, you know what it is, but you can't actually explain it. I'm in a place now where I can say, what is financing? And how I would describe it anyways is that it's really defined as when you go to purchase something, you have a choice of how are you going to purchase it? Are you going to purchase it by borrowing money? Are you going to purchase it by paying it in cash, like physical cash, or are you going to pay it off your debit card, which is what most people would consider the same as paying in cash? But it depends on which group of people you talk to on that one. Because there is actually a movement going on where it's really important for us to pay for things in actual cash before we lose the opportunity to be able to do such a thing. There's also, especially when we're buying a car, there's also leasing where you are just paying rent essentially to buy something.
Yes. Yeah. And I think like most people, I bet if you were to go on the street, maybe like Jeremiah do, if he were to go onto the street and ask, and maybe he has, like he does if he goes onto the street and says, what is financing?
Yeah.
I think the answer that you would get most of the time would be, oh, when you go to the bank and you ask for a loan, you're financing whatever you're purchasing. I think that would be what most people think of first. But let's challenge our thinking here and look at financing like Nelson did. Look at it in a different way. And once you wrap your mind around that and change that mindset that is ingrained, you really start to look at money differently.
Mm-hmm. So to finish off the statement that Nelson would use, that every single dollar you spend is a financing decision, and you are either paying interest to someone else or you are losing interest that you could have otherwise earned.
Right.
And that is a fundamental concept that we all should really know before even balancing a checkbook, which was taught in the career and life management in high schools. It's even more important than knowing how to count money in a way. Just understanding the fundamental principle that the way in which we spend our money makes a big difference in how much money we are able to keep. Because if we're constantly borrowing it, I guess you wouldn't know about borrowing money until you get to a point where, you have a credit card in your hand, or if you happen to be lucky enough to have parents who will lend you the money and expect payment back with interest. But I think that's a hard boundary for, I think, most parents to keep for themselves. You won't really truly know what that is until you start borrowing money, that it's harder to keep it because you're paying all this extra money out because it's the trade-off to not having your money saved before you start. And you made a comment today that your husband, Reed, was re-listening to the Becoming Your Own Banker book. And What did he say to you?
So he is swathing hay right now. And it's taking 1,000,000 years. In his words, his butt will be nailed to the swather seat for the next 6 days. So he's listening to audiobooks like he most always does. And he re-listened to Becoming Your Own Banker. And he said, I really was reminded about what Nelson talks about in the equipment financing section. So in this particular example was a 4-year period where you're paid into your policy for a period of 4 years. So for Reed, it brought up our son Jet. He'll be purchasing his first vehicle soon. And he's like, okay, so if he owns a policy as soon as he's 16 and he is funding it for the next 4 years and letting it build in there, then by the time he needs to replace his first vehicle, he's already built it up in his policy so that he can access the financing and pay for his next vehicle with money that he's been putting away and storing for that 4 years. So Reed's like, man, you really do, even though I know this stuff, you really do have to go back and remind yourself, because he hears me talk about it every day. He practices it, but he still needed that reminder.
Yeah, it is. It is different to, that's interesting that you say that. It's like, I know this, but you still have to question yourself. It's like, okay, yes, I know it. Do I practice it? Do I actually implement this?
Yeah.
And like Jet, just on the precipice of still being young and not really have created any vicious cycles of anything. And especially with the vehicle, if you can start a spending pattern, a financing pattern, because we're using the word financing, if we're using the financing method of setting money aside and then borrowing it out of your policy later on to then have money for that vehicle, whether you're saving inside these policies or not, the whole cycle of us as every human being is that we got to earn money and then it goes into account and then we got to spend it. And then we're either saving for something and then we got to earn it again. Like it's just over and over and over again. So either we're saving inside of some other account for the next thing, if you're the saver type of mentality. And you know what? There's a lot of people who genuinely love to save and have a hard time actually even spending money. But the question is, where are you warehousing the money that you're setting aside? And are those terms and conditions honestly the best place for you to then take from and then put it back into?
Yeah.
That's where Lacy and I really help to distinguish that difference. But again, coming back around to what Reed was saying, it's like just that fundamental principle of getting started, whether you're 16 years old, 30 years old, 50 years old, it doesn't matter. You can change your financing, the way that you finance things so that it works in your favor.
This is turning out to be a really great episode. Thank you, Sydney. But I was listening on my way home from town this morning. Mary Jo had shared a podcast with me. It was this guy, a horse trainer in the US. Anyway, so I'm listening to it and he has a successful training business. He's being interviewed and they said, like, if you could leave 2 things with people who you mentor or people passing by through whatever, what would it be? And he said, the first one would be Jesus. And the second one would be, and it's actually, I was answering these questions in my head and we are the same answers. So the first thing in my head was Jesus. I would leave them with Jesus and work ethic. But he said work ethic / responsibility, because I think that kind of goes hand in hand. And then I kind of like got off into my own thoughts and I need to like back up a few minutes in the episode. And then I'm like, but I would also leave financial stewardship, because then I started thinking about what Reed was saying. Like I was reminded of this, how you prepare, let it capitalize, whatever. So I'm just like, yeah, if we can leave people with financial stewardship and just continuing to spread Nelson's message, I want to say like we're leaving them a gold mine. We're leaving them a gold mine of knowledge and resources.
Mm-hmm. It is definitely for those who are willing to do the work to experience more quality and options in your life. I'd love to say that everybody that comes through our hands 100% just ends up doing infinite banking, but that is not the case. This is not for everyone. And sometimes people can be, my client for years and years and years. They start off with the term and I do my best to like plant seeds with them about what this is and how important it is. But people have their own lives. People have different points of focus on what they want to do. And because there is so much financial noise out there, especially around growing money, because there's so much fear in the marketplace about what's going on. And so sometimes the desire to invest our money becomes greater than just stopping and listening to, okay, what am I missing here? Do I actually have a good, strong financial foundation? Do I have good values around money that can actually sustain me to keep what I'm growing and building? I do truly feel like what infinite banking concept has taught me and the people along the way that have mentored me is that, if you don't learn how to keep more of your money first, even if you invest and grow your money, you're not going to have one earthly idea how to keep more of it because you haven't done the work. This is the foundation of what you do before you actually go and you invest. And the truth of the matter is even if you want to invest your money, you don't want to borrow money to invest money either. So you got to
No.
actually have money saved. The better way to invest your money is to have money saved in order to then invest. I mean, you could also use other people's money, but you're more or less doing the same. You're borrowing money, someone else's money to grow your own. So truthfully, the best way to do it is to grow your own money. Just to finish off that thought too, because everyone here is coming from a different vantage point about what they know or don't know about what we're talking about, is that when you're doing it with the infinite banking mindset and you're using the dividend paying whole life insurance contracts to talk about financing to save your money. And then once you have all that money saved for the thing that you want, i.e. a car, let's just say, you take that money out of the policy and then, you use it to buy your car the way that you normally would. If you want to save for the next car, you got to put your money somewhere.
Mhm.
Anyway, so
Well,
you're going to
and
put it back into
you
the
have to be
policy.
prepared,
Yeah.
right?
Yeah.
Because, like, what's saying that the car's not going to crap the bed and you're going to have to replace it? Like, I mean, I guess you have to get a bicycle.
Yeah.
I don't know, right? We just got back from a week-long family vacation, a road trip, and there were so many hours spent like with meaningful conversations with our kids. And a lot of those conversations centered around stewardship of the things that you have, stewardship of your money. I drive a car that I don't love, but I steward it well because it
That's
is my way from point A to point B, even though she's not my favorite car that I've ever had. And so on our way out of town for this trip, we dropped her off at the mechanic and she got a little tune up and the mechanic said, "Oh, this is such a nice car." And he said, "Do you love it?" And I said, "No, I'm just going to be honest with you. No, I don't love that car." I said, "It is a good car. Yes, you are right. And I am grateful for this vehicle. But no, I don't love that car for a few reasons." But I said, "But I take care of her because she gets me from point A to point B." Even when we're talking about we finance everything we buy, we're a steward of everything that we own. And so and
well,
that
that is
goes
the
along
hope.
with our money. Oh, yeah, that
That
is
is
the hope.
that is
We
the hope.
should be.
Yeah.
That we should be.
Yeah.
So that we're not caught with our pants down.
Well, it's no different. I really have one last thing to say about this piece is that it's whatever we choose to own, whether it's a car or home or a business, even though you might not love 100% of everything about it, but if you maintain it, if you need to go and sell it, then at least
Right.
it's already maintained. Then you're not trying to have
Absolutely.
come up with all this money on an emergency basis to like then fix it up and then have to sell it. Like you just
Absolutely.
have it ready to move when the opportunity strikes. So my ending thought about the great part about financing in the sense through a policy, saving in cash, but saving through a policy is that when you go to borrow from your policy, what it can do that a bank account cannot do is that even before you're done replenishing it, there's actually more to borrow from than when you first started. It is one of the best financing methods to purchase anything in life because it's like having a line of credit that you own and control, except the limit on that line of credit grows every single day. Okay.
Yeah.
There's a lot of similar features like a line of credit, except it happens to be an insurance contract. And there's a lot more contractual guarantees and there's a lot more benefits that you wouldn't get with any other financial instrument. And that's what makes it so special. And there are trade-offs to this. You can't just, you can go to a bank and get a line of credit, maybe unsecured or secured, as long as you can prove you have a means to pay it back. But with what we're talking about, that's not necessarily the case. You do actually have to qualify. And you could have all the money in the world to be able to start something like this, but you might actually not be able to qualify to get it in your own name.
Case in point, me. Yeah.
Well, at the moment, you.
At the moment, yeah. I just had my annual CT scan this morning, so I am expecting perfect results. But yeah, I am an example of the insurance companies not interested in me at the moment. But thankfully, I already had a policy in place long before I was diagnosed. So that is a major thing because we're not always approved, right? They don't always see us as a good business partner, and that's their prerogative.
And your need for insurance has grown, and your current policy is better than no policy, but you do need more now. And
yep.
Yeah.
And I am building, because of the ability to make deposit option contributions to my current policy, I'm growing that policy, and it's amazing. But that might be another topic. So in Nelson's equipment financing that Reed was listening to, I just want to read like the first little bit because I like what it says. So
Okay.
he says, now that we have established the fact that a dividend-paying life insurance policy has all the characteristics of a banking system, so this is reiterating what you just said, let's refresh your memory of the steps it takes to get into the banking business and then use the system to enhance the things that you're already doing within your regular line of business.
Mm-hmm.
All you have to do is select an appropriate plan of life insurance with a quality dividend-paying life insurance company and put some money into it. You must build the capitalization phase over a period of time, such as 4 years minimum. Okay, so that's all I'm going to read. Nelson said it there.
Yeah.
And that's the message that we're continuing to spread. And like we've said it a million times before, life insurance doesn't exactly have the best reputation because most people have been taught to see it as an expense. But we're here to teach you that it can be a business partner to you. It is an asset to you. And so Nelson explains that perfectly right there.
Mm-hmm. If it's set up in such a way, I mean, a lot of people understand life insurance because the kind of insurance we're talking about is life insurance. But there is certain kinds of life insurance where a lot of people say, oh, I'm worth more dead than alive. And quite often it's like rental insurance, actually should be called death insurance because the only positive is that it gives peace of mind while alive, but no living benefits other than peace of mind. That's not the kind of insurance that Lacy and I are talking about at all. And the equipment financing chapter that Lacy was just talking about, yeah, sure, you can go on Audible and you could listen to it audibly, but this one chapter where it actually has charts and numbers and things. And so it's actually better to get an actual copy. It's a great reference book for a variety of reasons. And Lacy's kind of showing it off, showcasing it. And so we do have copies in our office, and we usually offer it in a bundle.
Ask yourself, what does it mean to you whenever somebody asks you what is financing?
Yeah. Anytime you buy something, are you making a conscious effort like, okay, I'm buying it through a credit card, but then are you doing it because you don't have money, or you're doing it because you're getting points and benefits, and then you're going to turn around and pay for it out of your bank account because you already have the money to it? Or are you paying for it in cash and then giving up the interest that you could have otherwise earned?
Absolutely. Okay, you know what to do. If you've been here a while with us, head over to ranchyourway.com. That's where you're going to pick up your bundle of Becoming Your Own Banker and Farming Without the Bank. And you're also going to get the audio version of Farming Without the Bank. And this is all the Canadian edition on the farming book. Head over to Apple Podcasts, Spotify, or iHeartRadio. We would love for you to leave us a 5-star review. Questions, comments, or feedback can be sent to wecare@ranchyourway.com. Bye, guys.
So glad you leaned in with us on the Winnie podcast. We truly hope you're feeling more informed and empowered to take another step towards optimizing your financial life. Right now, make sure you hit subscribe so you can keep growing and learning with us. Until next time, we wish you prosperity in every area of your life.